This is the weekend report for March 26th. Well, the indices have broken through very, very important support, and unfortunately, the internals have confirmed the move. This is the spiders on a daily basis, and you can see the rotational pattern we were in right through here. And I keep showing this because I think it's really important in the daily briefings. And we broke out of this rotation here. Then we broke out of this smaller rotation. And then, of course, now we're coming down to this 630 level, which is the next important level. This area here, right here, that we broke through, 644, 645, that was a critical area to break through, which opened up trading to 630. Now, if we break 630, it's going to be a different story. Looking at where we are right now, I'm going to change this to a weekly chart. So you can see this is where we are right now. This is 630 area. That's going to open up the potential to trade all the way down to this 450 level. It's a 480 level. As you can see, that's the next lower low on a weekly basis. So you can see this move higher, and you can see what's happening here. Now, if we break that area there by a substantial amount, then that's going to open up trading all the way down to this level here. Now, in the meantime, you can see these higher highs and higher lows on a weekly basis. Those all offer also potential support levels as well. Going back to a daily chart, you can see that right here we could look at this as another the 618 level. Then another one would be down at the 591 level. And I will cover all those should we get down to those levels, because then we can determine as we approach those key reference areas that what the internals are doing, and determine whether there's going to be a breakthrough of another support level, or whether we could see a pause or potentially even a bottom and a rotation back to the upside. Now, I think it's important to point out that when we were looking at this was last Friday's trading, and I pointed out that this was an exhaustion move. You can see that it was on high volume. You can see sellers exhausted themselves, and buyers came in and drove price back up. You can see the buying tail. The very next day, or the very next trading day on Monday, I pointed out the fact that this was an exhaustion day also, but the opposite. It was an exhaustion day to the upside. You can see the buying or the selling tail that came in right as it approached that 640 level, and then of course we had volume on that day that was almost as high as it was on Friday, but not quite. But it was still high volume in relation to everything. The other thing now to point out is that on a daily basis, you can see that as we travel down into these lower levels of support, especially into this 630 level, you can see volumes beginning to increase. 52-week highs minus 52-week lows are declining. And for the most part, you can see what's especially happening through here. Breadth is declining as well. Net volume is not looking positive. You can see that's declining. So that's suggesting that there's more and more shares that are being traded to the downside than to the upside. In terms of the Qs in the NASDAQ, this is a weekly chart of the Qs. So you can see that we have traded through important support levels. Next level of support, should we break that 550 level, is going to be the 400 level. Let me get this back to a daily chart. So just keep in mind that the 400 level is going to be really critical. This is a daily chart, and you can see the rotational pattern that we've been in. We broke through on this day, broke through the 580 area, and now we're testing this 560 area. So it's really important now for the Qs to hold this 560 level, but if it's broken, we're looking at trading down to about the 550 level as well. So once that's broken, then we have to go back to the weekly chart to determine what's happening in terms of the next level of support. breadth falling off pretty dramatically. Volume in the Qs just kind of really flat, really not going anywhere. But net volume is down, as you can see, pretty significantly. And then in the Russell, in the IWM, it's lagging the other two to the downside, which is very, very interesting. So you can see this move to the downside, the breakout move right through here, come back and a retest of the breakout, and then of course now 240 was tested. That's the next level of support in the IWM. If that's broken, we're looking at coming down somewhere around the 230 level before it's over. Volume increasing, breadth decreasing, net volume decreasing as well. In terms of overbought and oversold, you can see that we are approaching oversold in the NYSE, and we are extremely oversold in the NASDAQ. So basically, the NASDAQ is showing more weakness than the other two indices. The S&Ps are showing a little bit less weakness than the NASDAQ, but the Russell is showing a little more strength than both of them collectively. So it's going to be very interesting to see how we develop into this next week. Now, volume, this was a volume spike due to it was option expiration day. So you can see that there. So we have to kind of eliminate that from our analysis. But you can see volume falling off in the NYSE, rising slightly in today's trading. But you can see what's happening with net volume. This is pretty significant. Same thing with the with NASDAQ volume. This is true NASDAQ volume. A little bit of an uptick as we approach this. But look what's happening. Look at this warning that the NASDAQ net volume was giving us going into the last week to 2 weeks of trading. Now, I said in the weekday briefings that there were 3 charts that I was going to watch very carefully, that I felt like that would be determinant on whether we were going to see a continuation of the move to the downside. That happens to be, this is the S&P 500, the percentage of shares above the 20-day moving average and the percentage of shares above the 50-day moving average. Now, there was a little light at the tunnel, at the end of the tunnel 2 days ago when we got this bump here in the percentage of stocks above the 20-day moving average, and the same thing with the 50-day moving average. But you can see what's happened over the last couple days. You can see that it has declined once again. This is very concerning because this is telling us that out of 500 stocks, only 69 were trading above their 20-day moving average, and only 99 were trading above their 50-day moving average. So this is showing a lot of internal weakness within the indices themselves. This is NASDAQ, percentage of stocks above the 20-day moving average, percentage of stocks above the 50-day moving average. So you can see it looks like we're going to see a continuation of this move to the downside. And in the Russell, a little bit stronger once again, percentage of stocks above the 20-day moving average at 520, and the percentage of stocks above the 50-day moving average at 456. So it's going to be very, very interesting to see. Now, I'm still of the opinion that this market is trading and finding value based on the news events coming out of the Middle East, the price of oil, and now maybe even in particular the 10-year interest rate on U.S. Treasuries. Now, this happens to be a chart. I've got 2 charts here. One of the let me see if I can get the whole thing in here. This is the 30-year bond, and this is the 10-year note. So you can see that we have in today's trading, we were up pretty substantially in terms of interest rate, but we closed at right around the 4.44 interest rate, as opposed to where we were, which was up around the 4.8, almost at 5%. So between that and USO, I think that that is weighing on the market. Consumer sentiment came out and it was not positive. So unless or until we get some good news out of the Middle East in terms of what's going on with Iran, I think that the market is potentially looking forward and seeing that there could be a pretty good slowdown in terms of the economy and corporate earnings. So going back now to the daily charts because I want to reverse this in that we know where the levels of resistance are, but support levels are, but in terms of resistance, initial resistance is really going to be the high of today. In the spiders, in the Qs, we're looking at potentially around the 580 area, and in the IWM, we're looking at about the 255 area in that stock as well. Going to be very important next week to see some progress coming out of the Middle East. We need to see oil moving lower. I think I got a chart here of USO. There's a chart of USO, and you can see that we tested the 125 area in today's trading, testing these tops. Looks like a triple top, but you know what? Triple top is not a triple top until it plays out. So we won't know if that's really a triple top until we see the market begin to sell off once again. If you're tracking oil, I track it through a USO. You can see that right around the 109 area down to about the 107 area is going to be support. That happens to be this buying tail right through here. If that's not defended, typically I find that if it's not defended by about 50%, which would, I'm just kind of visualizing it here, which is potentially going to be around the 108 area, then that's going to get completely retraced, and then that would be a very important level, let's call it 106 half area. That if that is traded through, then we've got basically this whole area to go through right through here. We're coming back down into this rotational area right here before the war started. Have a great weekend, and I'll look forward to subscribers to pick this up on Monday. I think it's going to be an important day, important part of the week, especially if we get some news over the weekend or if President Trump makes some comments about potentially ending this thing and ending it fairly quickly. Have a great weekend.